Now, today we're going to be talking about fixed mortgage rates rising, not what people want to hear. And have they now reached their peak? Because since this war in Iran broke out at the beginning of March, right at the very end of February, beginning of March, bond yields started soaring. Now, as you'll always hear me say, fixed mortgage rates are heavily influenced by bond yields. So when bond yields rise, this puts upward pressure on fixed mortgage rates. Now, most fixed mortgage rates have now climbed up over 4%. We were down to as low as 3.54, 3.59. In some situations, most are now over 4%. There are still some insured rates that you can get for under 4%, right at 3.89, which is going up to 3.94 effective tomorrow. But that's the lowest 3-year fixed insured rate right now. Most other rates are now over 4%. And again, this is all attributed to the war in Iran. Bond yields actually hit their highest point since June 2024. Now, in June 2024, fixed mortgage rates for a 3-year were in the high 4% to low 5% range. So still quite a bit higher than where we are right now. Most lenders are sitting in around the mid 4% range for 3 and 5-year fixed. Now you can get discounted rates from there. As I mentioned, there are still rates under 4% in some situations. Actually, you can still get a 3-year fixed at 3.99, which covers most situations, but that's going up tomorrow to 4.04. So these rates are climbing. Virtually all lenders have increased rates over the last few weeks now. Now, if we go to this week, bond yields have dropped. Now, they haven't dropped enough to result in us to get excited. They dropped about 7%. And this was purely on Trump's comment saying the war is going to be winding down and it's only going to last another 2 to 3 weeks. Now, the market reacted. Bond yields have dropped roughly 6% since the beginning of the week. Not enough to get us excited, not enough to result in any downward pressure on rates. It could mean that they have potentially peaked or close to peaking, but I certainly would not count on that, nor would I even wager any sort of bet that they have peaked at this point. We're seeing a market reaction to Trump's comments. So Trump had mentioned this thing's going to be over soon. Yeah, he's been saying that for a while. And I don't even know why the market is reacting to his comments because he just tends to talk a lot. But the market reacted, bond yields have dropped, and the stock market rallied with those comments as well too, thinking that, okay, well, maybe there's an end in sight on this thing. Maybe there's a light at the end of the tunnel. But we really don't know. So have rates peaked? Well, do you believe Trump? If you believe Trump and if you believe what he says, well, then maybe. But if you're like most people who don't, then we very well may see bond yields continue their upward trajectory. And that is, I would say, the likely occurrence. That is likely what we're going to see. But again, there's no guarantee. No one knows what the future is. No one knows what's going to happen. No one knows when this war is going to end. But as long as that Strait of Hormuz is closed and as long as we have this energy crisis as a direct result of that, I wouldn't expect fixed rates to start dropping anytime soon. I wouldn't expect any cut from the Bank of Canada. There was starting to be some talk that there could be a cut later this year. I would not count on that at all, especially with this war going on. That's basically what is happening right now. So we've seen bond yields drop a bit, not enough to get us excited about. It's always nice to see them drop, but we still have another lender increasing rates despite the dropping bond yields. Again, if they even remain at the current level, we could still see more increases to fixed rates, and we likely will. So I'm still not convinced that this is not another repeat of 2022. So what happened in 2022? Well, Russia invaded Ukraine, which was completely unexpected. That created a significant disruption to the supply chain, which resulted in the Bank of Canada increasing their rate by 4% by the end of that year. What was expected was an increase of 1 to 1.25%. We got 4% in increases. So could that happen again this year? It's possible. We really don't know. This war in Iran was unexpected. It just kind of happened, and here we are. So now we're seeing this upward pressure in fixed rates that could potentially and may very well likely continue. So I don't think we're going to see a repeat of 2022. I don't, but we can't rule that out completely. It is possible. Anything is possible here. So the only way that you can protect yourself against this is to lock something in. If you have a purchase closing within 120 days, or if you have a mortgage coming up for renewal, you want to get a rate locked in as soon as possible. Waiting will cost you money if rates are rising. Now, locking in a rate does not obligate you to taking that rate. It just means that it protects you should rates continue to go higher, which is the likely scenario. So it guarantees that your rate will not be any higher than that. Now, if a miracle happens and if fixed rates start to drop before your closing date, then we can still get your rate lowered for you. We can even move you to a different lender if needed, providing there's enough time. But if you wait and rates rise, then you're going to have no choice but to accept the higher rate. Get something locked in, protect yourself, and make sure that you have something in place and that you're protected against rising rates. Now, I don't always tell people to lock in. I do when there's upward pressure on rates. Sometimes I say it's safe to wait. Sometimes I say you can wait a little bit. We tell clients all the time, let us watch the market for you. We don't necessarily need to lock in right now. But this is a time when I'm saying that you do, and if you want to save as much money as possible, you really want to get something locked in. I write a blog every Wednesday on the same topic. You can check that out at easy123mortgage.ca/blog. And again, to find out what the lowest rates are that you're going to be eligible for, reach out to us at info@pmtmortgage.ca, or you can call us the old-fashioned way, 647-368-5009.